Good morning. Ira Epstein of Linn Associates with your morning flash update for this Thursday, and we're at the 30th of July, 2020, time 9:30 a.m. Central Time. You know, if you looked at everything, you'd look at the market, you look at the gold, the dollar, market's very mixed picture. COVID-19 isn't getting the play it should. It's coming back, and it's coming back with a vengeance in the U.S., Europe, and Asia. Pay attention. You're seeing the markets react in the energies. COVID is the enemy of that. I've been looking at air travel, metropolitan travel, car travel. It's car travel that's getting the boon, everything else down quite a bit. If you take a look at bonds and notes, you're at 0.54 and a fraction trading right now in the 10-year note. Now, on March, 9th or so, when the market cratered, we got as low as 0.3, but the lowest settlement on a closing basis is around 0.54. We're knocking on the door of that. If you take a look at the grains, you've got to pay attention to what China's bought, what they're going to buy. Now, China has to, between now and the end of the year, ramp up its purchases in a major way for the corn and the soybean market if they're going to get to the numbers for phase one deal. Pay attention to that, and of course be leery if you're playing the short side that at any point you can get news on that. The dollar's still under pressure, and the euro, look at how nicely it's come back. The question is, will it hold? Silver market, we lost the embedded reading yesterday. You didn't get it back right away today. Boom, right down. $1 lower there. You're getting your break in all the other metals as well. COVID-19, I can't repeat this enough. Now, we're going to be looking today at the EIA natural gas storage. It's coming out now as I'm recording, so I haven't had a chance to see it. U.S. weekly jobless claims up 12 to 143.4. Not as bad as it could have been. I was fearful we'd actually get a number with a 1.5 in front of it because of COVID. We're not, and that's a good thing. Continuing claims, they went up, not down, 867 to 1708.1. Now, there's a problem here. People stop getting that check as of tomorrow. What's the impact of that going to be on the economy when that $600 a week isn't there anymore? That's part of what's going on in the stock market. Advanced GDP, a terrible number, a record number, but not as bad as the trade expected. They expected a negative 34.7. It's 32.9. Now, please remember, we're already into the next quarter, well into it. So this is for that March through June period. We know that things improved a bit, so just pay attention and understand that. As we look at the chain-weighted index, they expected it actually a positive 0.2. That came out minus 1.9. In fact, look at the rest of the numbers without me going through them. You can always hit pause to look at it. They're not pretty. And that not pretty is what set the stock market on its tail. We knew a bad number was coming. I think the reality of that with COVID-19, it set off a wild trading day. We're also at month end. So you got one more day to the month, you get all this craziness expected to continue and not go away as quick as you might think. You know, I cover all this in the mornings for you at about 5:30, 5:40 in the morning. And boy, if you want, like today in the euro, I honed in on the euro last night, honed in on it again today. And very frankly, I was looking for a bounce in the market off the break. Getting it doesn't mean it'll last the rest of the day. You know that's how it works. If you think I don't get wrong trades, I do. I was wrong the New Zealand dollar just recently, and on that rally that it just had. It happens, but it's a game of what? It's a game of control of risk. Number one, knowing where you're wrong. Number two, taking on the risk. Number three, and understanding what you're doing and why. And I try to cover that as best as I can for you in a touch of fundamentals early in the morning. Then I dive into the charts. I'm going to give you points of entry and why. Exit points. That could be a stop. It could be a profit objective. Where to be looking at these markets and why I'm looking at them in the way that I am. I cover a slew in the futures markets. And remember, for you ETF traders, if you don't think that your stock indices and your currency trades for these ETFs are based on the futures, wrong. Very much so. Same on the interest rates and the metals, obviously. And I do it in such a way each morning. Today's video is 25 minutes long. They're not all that long, and you need not watch them all. Here's why. In the bottom of every video, there's a slide bar. You can just go, let's assume you want it to go right to the metals. Metals will pop up for you. Boom, you're right where you have to be. Want to watch the whole thing and learn each day? I do that. I love to teach. The price, I'm teaching you this too. This is not expensive. It's a little more than a cup of Starbucks. Let's put it that way, okay? I drink Starbucks, so I know. Not that much more, right? Come on, 30 days of this. You decide after that if you like it or not. We also offer a combo package if you're an ETF spider trader with this. That's another value area. How do you find it? Go to our website. Under the word research, everything's there. I will talk to you at the end of the day today, and we'll review everything we've got. And of course, for my Spider ETF subscribers, you'll see me at 4 o'clock as I do the review again. I'm Ira. You have a great day.